Yeah.
Okay. All right, everyone, we're going to get started if you're ready.
We're ready.
Okay, so thanks for coming today. My name is Ben Wilkinson. I'm an attorney with Hinman Straub, a law firm in Albany. So I have made the journey down to speak with you this morning. It's my pleasure to be here. Just a quick second about myself and my firm. Hinman Straub does a variety of legal work throughout New York State and the country. I particularly practice in labor employment and litigation and commercial litigation. So things like these wage and hour laws, working in discrimination lawsuits, and breach of contract suits and stuff like that. That's what I work on. Our firm also has a number of other people that do work in that area, and then also work in the healthcare, insurance, and the lobbying world. So the purpose of this program is to go over some of the state and federal labor laws that would apply to your businesses. And this is going to be, we're going to hit a few key topics that there's oftentimes some confusion over, or that sometimes can trip up a variety of businesses, not specific to yours. But then there's some issues that may be particular to you guys. This is not supposed to cover everything about labor law that you may need to know in the course of the life of your business. But we're encouraging you to ask questions as we go, or at the end, I think is what we at the end. Okay, so but if something is urgent and you want to interrupt me, I won't be offended. And so with that, I think we are ready to begin. You also have the slides in front of you in case if you want to make a note of your question. That's usually what I recommend people to do for afterwards. And if you have a question and I don't know the answer to it, which sometimes that is the case, unfortunately, I have to admit that, then I would be happy to go back to my home base, look into that question and give you an answer. And the goal is to be as helpful and educational as possible. Okay, so here's where we're going to go today. We're going to talk about New York State minimum wage, New York State overtime and the exemptions to overtime, how to properly compensate employees, the United States Department of Labor and New York State Department of Labor audits, New York paid family leave, these proposed call-in pay regulations that are currently stuck in the New York State legislative process, and a very big topic, the last year or so of sexual harassment, both kind of a general overview of sexual harassment and then also some changes that New York State recently made that might be relevant. So with respect to New York State minimum wage, so the Minimum Wage Act requires that as a baseline, all employees in New York State will receive at least $10.40 per hour. There are these things called wage orders where the legislature and the Department of Labor set certain requirements that are industry specific. So if you fall under a different wage order, if you are in the like construction industry, that's where that might come up. Okay, so they break up what you have to pay for minimum wage based on the location of the work that is being performed. And there's been, in the past couple of years, there's been an increase in what the minimum wage will be across the state, downstate and upstate, but they differ based on the location. So, can you guys see, by the way? You're good? Okay. And even if I'm standing here, you're good. Okay. So, effective December 31st of 2017 in New York State, minimum wage has to be at least $10.40 per hour. And then over the next couple of years, we're going to see an increase to get to $12.50. In New York City, they break it up versus the size of the employer. But as of December 31st, 2017, if you are what's considered a large employer, which is 11 or more employees, it's $13 per hour. And if you are a small employer, 10 or fewer employees, it's $12 per hour. And then we're going to incrementally increase it over the next couple of years to get to that 15 per hour, which is what Governor Cuomo, there were a lot of those signs that said 15 per hour around. You may have seen those. That was the objective. And this is confusing a little bit because it says effective date December 31st, 2017, which means for 2018 you need to look forward for what these two rates would be. And then for Nassau, Suffolk, and Westchester counties, which many most pertinent to this group, it's 11, 12, 13, 14, 15. As you see that incremental increase, they get to that 15. Okay, so here's a kind of cool graphic that we made up that shows where we're at, and it should be actually 17. Sorry, but where we're at now, based on your location, and then where we're going.
Would Queens, where Aqueduct is located, would that be considered New York City or Nassau, Suffolk, Westchester?
It's New York City because it's within the 5 boroughs, yeah.
Well, let's say, you know, you have people stationed at Belmont, which is one county, and Aqueduct, which is another county. So what happens, like, you have to keep track of the counties separate?
Yeah, 2 different rates for the location in which the work is done.
We're supposed to, like, we send people from Belmont, they work towards an Aqueduct, we're supposed to pay them $15.
So they work in both counties.
Yeah.
It is an administrative nightmare in that respect, or it can be.
So if they just go for a race, so what about that?
You have to get their teacher.
Yeah, if they're doing the work in the county for
Like
that day.
For like 3 hours,
Yeah.
they get
Right.
that.
If they cross the county line, they're doing the work in that. That's,
And
I
then,
mean,
so if you go to another state, you have to pay their rate
If you send a horse out to run
in Maryland, so you have to do Maryland's wage?
yeah, you'd have to abide by it. Well, you have to first think about the state you're in, and then also the federal government. But usually the states cover that. But so I don't know about the other states what their minimum wages are. So
But if they leave for like 3 hours,
It wouldn't be
you still have to pay them for the 3 hours.
right.
Like they stay well here, but they go to Queen, you know, Aqueduct and race.
Yeah, if you
3
just-
hours.
the county
So
to
you pay them
county.
3 hours.
Yes.
At 15.
Lisa,
Holy shit.
no, don't forget, when they cross the line. They're
Oh,
on the van
so
holding that
it's-
horse, it's from the time they get over the Bell Parkway, when you cross over
Yeah.
that bridge. If they're on the
Yeah,
van
but my
with
guys
that
don't hold the
horse,
shank in the
Doesn't
van. I don't know
matter.
about yours,
It doesn't
but they're
matter.
no, my guys are getting a free ride over to Aqueduct. I don't know about you.
It doesn't matter, if they're there to be with your horse,
Yeah, but I have to tell you something. I specifically asked that to the Department of Labor person last year, and they said no. I said if the horse is in a stall and nobody's touching the horse, and we're just giving the guy a ride over there, they said no, you don't have to pay him for that.
if you're giving the guy a ride over and you're
In the van, no, in the van.
No. If
That's
your
what she
groom-
told me.
If your groom is on that van
Yeah.
tending that horse, you have to pay that groom.
I would agree with that conclusion because you're controlling their ability to do anything else. Their work is they can't go work somewhere else because they're on that truck at your request, at your direction. Right?
And don't forget it's until they get back. So what we're doing,
Oh, forget it. I know. Yeah.
5.5 hours. Because from the time they leave the stable
Wow,
and they
yeah,
get back
yeah.
to the stable, it's at least 5.5 hours.
Yes, sir.
So you know this track where we're at right now, at the top of the stretch, we're actually in Queens County. So there's an exercise rider, exercise in Queens County.
That's a good
at the top of the
point.
stretch, in Nassau County here. So, you know, it just gets a little ridiculous with stuff like that.
I understand what you're saying. This is a unique situation, I think, when you have a work site that crosses 2
But
different
it's just
counties.
too many everything can't be in general. Everything has to be
I
unique
wonder how
to us.
you could yell at me to get going on.
Naira has maintenance crew at Belmont Park. They have to pay hourly wage. Sometimes they're up working at the top of the stretch. Are they paying in New York City hourly wage or Belmont Park, which is in Nassau County?
Well, I
I'm
mean,
sure they're paying well above it anyway, so
Well,
you
I'm
don't
just
have to worry
saying,
about it.
you know, you gotta think
I
of
mean,
these
if you're
things.
covering your split shift, you're covering Queens and every other county anyway.
You know, if your base of operation, your address, your physical address of where your operation is, Belmont Park, Nassau County.
I get it. I get
And a
it.
guy for an hour or two is off in Queens County because it's very difficult to keep track of that.
right, I understand. I know it's a
If we were
difficulty.
stable at Aqueduct, then I could see abiding by the city regulation
Right.
as opposed to the county, Nassau County. But when the guy's base of operation is in Nassau County, and he's only out of it for an hour or two, this makes life very difficult.
No, I understand, and it's. I wish I had an easy solution for a lot of those, and I know that this is a unique industry that does run into those problems with putting people in different counties that may have different minimum wage rates. The best I can do right now here is make sure we all are on the same page with what the general guidelines
Yeah.
are, and then either afterwards or in the future, if you have questions about abiding by the labor law regulations and the best practices to avoid any problems, because that's a lot of what, you know, we can offer you, is to tell you what you can do to be in the best position, most likely not to get penalized. But we can't tell you every situation what's definitely going to be happening and what's definitely going to be seen by the Department of Labor.
Is there a common sense element in the Department of Labor?
You know, some people would argue that that's lacking, because it's a general, like you said, it's a general regulation that is applied to a number of different industries. And you know, we see that in like the home care industry, where they have different home care aides going to different locations, and then what is the wage rate for that if they're taking care of someone in one home and they go to a different home that's in a different county. You know, there's realities with that difficulty, but I know that common sense, we would like a little bit, an injection of that. But, so I don't want you to think, or anyone to think as we go through this, that I don't hear you on those issues. But I can't necessarily at this juncture change the way that what we're dealing with. So we see these periodic increasing minimum wage hourly rates, and the Department of Labor, or the legislature, has said that in January 1 of 2019, there may be a suspension of this increase in minimum wage based on a budget and economic analysis to determine if the minimum wage increases should continue. So we'll have to stay tuned to see if that actually happens, but they built that in to be able to do that. So something you guys have probably dealt with in the past is the Wage Theft Prevention Act, which went into effect in April 9, 2011, and requires employers to give written notice of wage rates to each new hire. It's a specific form that has to include particular information that goes over the rate or rates of pay, overtime rate of pay, how the employee is paid, what the regular payday is, the official name of the employer, address and phone number of employer's main office.
That's this sheet, right, that we make everybody fill out?
Yes, yes.
Okay. And then we have to copy, give it to them, update it every year, right?
That's the best practice. That's what we would.
I just want to make a comment. I was told last year that it was recommended that it was given in their native language.
I have one in
So,
Spanish, but they've been
yeah.
I think a
allowing
lot
us
of
to do it.
Oh, really?
That's
They have one that's a combination, right?
Yeah, the combination.
He speaks English, but this is the combination she wrote, check here, right,
Okay.
Spanish.
Now,
Because I have the one that has Spanish and English.
Where did you get that? I couldn't find it online. I couldn't find it online.
well, last time that you just know that it's
I would not
don't
just
have
put
to
You
do
don't
it
have to do that.
every February 1st.
Wait, someone told you it has to be every February 1st?
No, originally when it came out, they wanted to re-up everybody on February 1st, whether they continuously work for you or not, and they said, don't do that, it's not required.
Okay, so you don't have to, every time you don't, on a yearly basis, you don't have to do
Right,
it.
okay, that's what I was talking about.
But I'm saying that if the minimum wage is increasing every
Oh,
year,
sure. Yeah.
then in order so that you just
Required.
cover your bases and
And
you
you
don't.
gotta date it the 31st of December.
Right,
not
or
the 1st of
January 1 of the next day when it goes
Oh.
into
Wait, what?
I
effect.
think the 31st counts.
Say that? What? Say it again?
I think that's what we were told.
Because I
The actual
dated mine all
31st,
1/1/18.
That day, the minimum wage goes up,
I-
not January.
That's probably.
That's
Oh,
it.
I got
I don't know.
got you.
I don't know specifically if it's between December 31st and January 1st, if that's going to penalize you somehow. The point is to have the
It
forms
is a labor
done.
board, it could be a couple $100.
So, to finish the answer to your question, sir,
Rick?
Say it again?
to finish the question on whether to get them to re-up them every year. Because the minimum wage is increasing based on your locality, you would want to have that new minimum wage on the form so that you just there's no uncertainty.
Right.
The thing is, I'll get to this in 1 second on, hold on. I'm gonna go back. Oh, we don't have that slide anymore. You don't have to, oh yeah, the obligation can be satisfied if the change in wage is on a subsequent wage statement, like a pay stub, where you see that the rate has increased from $12 to $13, and then they can easily understand that that's what they're going to be paid. So just to go over some of the basics really quickly, that form that this young lady just had was a standalone form. It can be given electronically, but there must be an employee acknowledgement system where they actually sign it and give it back to you. You have to keep them for 10 years, which I know sounds ridiculous, but that is what's in the labor law.
6 years.
What'd I say? I'm sorry. I'm making it harder for you guys.
Yeah, really.
Crowd,
It's scary.
Sorry. Okay, 6 years. And then if you're gonna do a change to their compensation, it should be provided 7 days prior to the change. And then we just talked about that, the wage should come in. So this is a language requirement, must be given in English and an employee's primary language. If the Labor Department has a translation, so they have certain ones, Spanish, Chinese, Haitian, Creole, Korean, Polish, and Russian. So that's what the form looks like. I have seen combo ones where
combo
they
ones
have
are good.
part English and then right beneath that is like Cyrillic, is one I recently saw. So, and they edit it on top of the form,
That's
and I
exactly what I
I
have.
have seen that that's okay.
Yeah.
And then at the bottom, it says about making copies and giving them,
Your
I always
employees
give,
a
Right,
copy.
yes.
Yeah.
Yeah, they should get it back.
But they don't, they throw them away.
Well, then, at least you've done
Done
your
your-
duty. Okay, so any questions on the Wage Theft Prevention Act?
It's an easy part.
Okay, so we're gonna talk about overtime exemptions. So, New York's overtime rules allow you to exclude certain employees from overtime. So that those employees, if they work more than 40 hours, you don't have to pay them overtime in certain situations, as long as certain criteria is met. So, there were some changes in 2016, but I'm gonna go over the basics first, and then we'll talk about what it is now. So in order to be exempt from overtime, so that you don't have to pay them overtime, they have to be salaried, be paid more than what's called the threshold, which at that time was $675 or $35,000 annually, and then they have to work in a executive or administrative capacity. New York doesn't require a professional to have an income threshold. So that's what it used to be. And then in December of 2016, the DOL finalized regulations that increased the income threshold required so that you can exempt an employee from overtime, so you don't have to pay them overtime. And the income thresholds that you have to meet in order to exempt them from overtime increase periodically, just like they were doing with the minimum wage. And it was effective December 31st. So now, in order to, in New York State, again, we go by geographic location. So in New York State, in order to exempt someone from overtime in 2018, they have to have a minimum salary of $780 per week. New York City, again, we go by the small and large large and small employers, and it's $975 per week for large employers and $900 per week for smaller employers. So what the regulation used to be was $675 per week. So you can see that these are enormous increases rather quickly.
So now, if we have a foreman who's a salary position, they're supposed to get $832.
What county are you in?
825.
$825. I mean, yeah. I thought it said $832 here.
I don't, type might be small? Oh,
That's
that's the
for
next,
20.
yeah, see, that's what I said before, that it can be confusing because effective date and what we're looking at, so this is for 2018, we gotta look at this one, because it's effective December 31st, 2017.
Oh, I got you.
And then for all of 2018, it's
Still
825.
$825.
Okay, questions on that for right now? Okay, so that's the income threshold. So this is just another graphic of what, where the increases are going. It's going to significantly increase over the next couple of years, so that we're getting it. Basically, this makes it harder to exempt employees from overtime, so that you have to pay more of your employees overtime, or you have to pay them more per week in order to exempt them. That's what this is doing. So we're going to increase in the next couple of years all the way up to 2021. In order to exempt them from overtime, you're going to have to pay them a very large weekly salary. Okay, but that's not the end of the inquiry. So it's not enough to conclude that just because someone is salaried, you don't have to pay them overtime. They have to also qualify under the duties test. So remember, I'm going to go really quick. This thing is real slow. The test is to be salaried, a certain income threshold has to be met, and then you also have to work in an executive or administrative or professional capacity. So what does that mean? So, like I said, we have to meet the threshold, and then you also have to be an administrative or executive, doing executive work. So, what does it mean to work in an administrative, executive, or professional capacity? So first we're going to do administrative. So the Department of Labor has said that having administrative duties is that your primary duty consists of performance of office or non-manual field work directly related to management policies or general operations. And that the employee exercises discretion and independent judgment, and that they conduct their work with some sort of specialized training, experience, or knowledge. An executive is that their primary duty is management, that they direct work of 2 or more employees, they have the authority to hire and fire other employees, and that their suggestion or recommendations as to hiring, firing, promotions carries weight, and that they have discretionary powers when it comes to the work involved. A professional is defined by the Department of Labor as requiring knowledge of an advanced type in a field of science or learning from prolonged course of study, or they work in an original and creative or recognized field of artistic endeavor. So the field of science or learning we're talking about here is like law, medicine, accounting, and the creative is like artists, painters, things like that. So there's no salary requirement like that $825 for professionals, but for executives and administrative employees, you have to meet that salary threshold. Okay. So properly compensating employees. We're going to go quickly over timely payment of wages, wage deductions, regular rate of pay, travel, on-call, and call-in time. Which I actually don't. I think we just cover travel on this slide, and then meals. So the timely payment of wages. The labor law requires certain time requirements for the payment of wages, and it can vary based on the employee type. Manual workers, railroad workers, salespersons, and clerical or other workers, they may have different schedules. Manual workers are required to be paid at least once a week, and that means mechanic, working man, or laborer. Certain large employers can get out of this. You have to have over 1,000 employees and you need a certain test. And then clerical workers are all other workers not falling within an exemption. So something about wage deductions. So there's been some changes in wage deductions that people don't always, they sometimes get themselves into trouble with. So New York scrutinizes the deductions you can take out of an employee's paycheck. They don't want to see that you are taking what you shouldn't be taking from an employee, not you guys, I mean all employers. That employers are taking more than they should from their employees, or that employees are getting into some sort of like indentured servitude where they are working because they have some sort of debt to the employer. So there's been some recent changes. So back in 2012, they changed the wage laws to expand permissible deductions. And they have to be any deduction made in accordance with any law, rule, or regulation, which is just a general. And then they also added these deductions specified by Section 193 of the labor law, which we're going to talk about in 1 second. And they also allowed for deductions for the recovery of overpayments and deductions for the repayment of wage advances. Because previously, before 2012, I don't know if anyone's familiar with this, you weren't allowed to withhold someone's pay or deduct their pay if you accidentally paid them too much in a particular pay period. Before that, you just had to hope that they would either give it back to you or you work out some sort of agreement. You couldn't work out any kind of deduction from their wages in order to pay that back. And same thing with wage advances. If you want to do right by your employee and help them out and give them a wage advance, there was no system in which you could deduct that from their paycheck going forward in order to pay you back, even though you were trying to help them out. So the idea of this was supposed to fix this so that you could do some more wage deductions, and these are the following permissible categories. They have to have a written authorization from the employee, so the employee's on board with it, it remains voluntary, and they have to have certain language, so I would not recommend that anyone do those on their own. But so now what permissible wage deductions are, they cover health and welfare benefits. It's like the standard one is insurance premiums, also fitness center and health club gym membership dues, things like that. Daycare is another large one. And in addition to those, there's pension and saving benefits. There's charitable benefits, which I think was actually already allowed before 2012, where you're making a contribution to a bona fide charitable organization. and there's representational benefits, dues for a labor organization, certain transportation for like metro cards, stuff like that. That's allowed to be deducted now, and then food and lodging, like payments made for vending machines, things like that.
Can I go back 1 second?
Yes.
So you can't pay bi-weekly anymore?
For
In our-
manual workers.
In our business?
Right.
It has to be weekly?
Yes.
Okay.
Okay, so wage deductions that are not allowed are repayment of loans that don't qualify under the regulation, which we have to go into further detail. I'm going to not make you guys do that today. The employee's purchase of tools and equipment that they need for work, the recoupment of unauthorized expenses, repayment of employer losses. That happens when like things get broken on the job if you're like in the trucking industry and stuff like that. Fines or penalties for tardiness, excessive leave, misconduct, quitting without notice. That's a big one where sometimes the instinct is if an employee doesn't do right by you and they leave or unexpectedly and you haven't paid them, you haven't finished their last pay cycle, then you don't want to pay them as some sort of deduction, some sort of penalty. We always recommend if the employee misbehaves, do not withhold their money because it will ultimately just penalize you in the long run if the Department of Labor or another entity comes after you. Because if someone's repeatedly late, you can't say, I'm going to dock your pay. You can say, I'm going to maybe reduce your hours, or you're on a suspension, but you can't refuse to pay them for work they've already done. Does that make sense, everyone? I'm sorry?
If you showed up late, how do you have done work?
No, I mean like if we're paying someone on Friday, they were late, but they worked Monday through Thursday, and then you say, I'm going to not pay you for Thursday. And then also, just to finish this up, contributions for political action committees, campaigns, and then other fees, interest, or employer administrative costs. The employer can't put the expenses associated with their business on a deduction for their employees. So just a quick note about regular rate of pay. So both the Fair Labor Standards Act and the New York Labor Law state that non-exempt employees, so employees who have to pay overtime to, have to be paid at a rate equal to 1.5 times their regular rate of pay for those hours that they work in excess of 40 per week. So if somebody has two different rates of pay, then it can be difficult to calculate what their regular rate is so that you can figure out what their overtime is. So here is an example of a blended rate calculation. So this employee has more than one rate of pay during a single work week. And what you usually do is calculate the regular rate by determining the weighted average of the two rates. So the employee works 30 hours of production work at $10 an hour. This is just, these are even numbers, we're ignoring minimum wage for a second. At $10 an hour and 20 hours of custodial work at $12 an hour for a total of 50 hours worked for that week. So you think 10 hours of overtime, but what do you multiply the 1.5 times by? So the total compensation is the 30 hours they worked of production at 10 an hour and 20 hours of custodial work at $12 an hour. And then you divide that by 50 hours, all the hours they worked that week. And that's the regular rate of pay per hour that you paid them, which was $10.80. Then you take that $10.80 and multiply it times 1.5. That's how you figure overtime rate, and it's $16.20 per hour. So then you apply that $16.20 per hour to the 10 hours of overtime. On travel time, which is kind of related to that discussion that we were talking about before. So what is compensable and what is not compensable? So compensable includes travel between job sites during the workday. So that would probably be one of the situations where you're going from one spot to the other. Travel to, and same thing with travel to another city for one special day assignment if they're going to a particular track for another place, for the same purpose within your employment. And then overnight travel during the employee's normal work hours on a work or non-work day. What's not compensable is normal home to work commuting, unless somehow they're doing work before or prior to commuting, which I don't think would happen for this group, and overnight travel if it's out of the employee's normal work hours. So a discussion on spread of hours slash split shifts, which don't try to say that 3 times fast. So this thing called spread of hours is a New York regulation that they define spread of hours as the interval between the beginning and end of an employee's workday. So if they started work really early in the morning and then their workday ends late in the night, that's their spread of hours. That's the framework in which we're looking. It's the time that they were working plus time off for meals and intervals off duty if they had like a 2-hour break. So a split shift is a schedule of daily hours in which the working hours required or permitted are not consecutive. So they have a chunk of work, and then there's a long break or a couple breaks, and then there's more work afterwards. So that's what we're talking about. So the rule is that employees must receive 1 hour's pay at the basic minimum hourly wage rate, in addition to the wage that they worked that day, for any day in which the spread of hours exceeds 10 hours. So if they are working at 6 a.m. and they work till noon, and then there's a break, and they work from 3 to 6, then we've eclipsed the 10-hour spread of hours, right? Because they started at, in that example, they started at 6 a.m. and they ended at 6 p.m. Their whole work day, even though they had a big break, but that they need to be paid that extra hour of minimum wage on top of what they worked for that week, for that day. Does that make sense? I see some confused faces.
Let's say you started at 5 in the morning.
Yes.
And finished at 11.
Okay.
Came back at 3:30 and worked at 4:30.
So that's, how many hours is that?
Started at 5.
Right.
It's not 12 hours.
No, it's 10 and a half, 11 and a half? It's over 10, right? So it's not the number of hours they worked in the day, it's the spread, the time frame, the whole universe in which their workday happened.
Can't be over 10 hours.
Right.
And that's added hours only if they're being paid minimum wage.
Right, because I don't have that slide.
I don't mean to get ahead of you.
No, but you're right. The additional hour at minimum wage is not a requirement if the total wages paid are equal to the greater. Okay, this is really confusing. It's if they're being paid more than minimum wage, then the extra hour doesn't need to be paid, because what they're working for that particular 8 hours times their regular rate, if it's above minimum wage, is going to be more than 8 hours at minimum wage plus an extra 9. So in that example.
Yes.
Does everyone get that?
As long as the total is more than if you had added in that extra hour at minimum wage, that's your threshold.
Correct.
For beating
Yes.
Because we don't pay for
Right.
split, because we pay for overtime now.
Right.
But I get now how, why, you know.
If the minimum wage is 11 and you're paying 11.50,
Right. Yes, then that's likely to, you have to do the math on that. If it gets, when it gets down to the decimals of, or when it gets down to the cents of the hour, then you would want to make sure that what you're paying them that's above minimum wage times the hours of the day that they worked, yeah, the total day, is more than what they worked plus 1 hour of minimum wage. So it's going to be more most of the time if you're above minimum wage. Most people, a lot of people think of, if you pay more than minimum wage, you don't have to worry about that. But it's really like you need to do that analysis of it.
have to do the math.
Yeah. I've talked to other attorneys who said, oh, spread of hours, this concept doesn't apply if it's above minimum wage. But there's like, if you pay 20 cents or something under 20 cents, I don't know the exact math, but it's, if you pay like 15 or 20 cents over minimum wage, there's a small window in which you can it still equals, or it's still, the rule still applies, sorry. Okay, so just a word on meals. Factory employees doesn't apply to you guys. Employees are entitled to a 30-minute unpaid meal period for shifts in excess of 6 hours. We don't recommend that employees waive meal periods. I'm sorry?
Got people that eat all day, does that count?
It's true. We do.
We got one that's not here, and the food truck's just about out of business.
Okay. I'm sorry.
I'm just teasing.
It's a different world.
Okay. So, employees should, our best practice recommendation is that employees should clock in and out for meal periods. That way you have a documented contemporaneous record. If that's not feasible to clock in and out, I know that can be difficult in this industry. If there's an alternative sign-in, sign-out system, or just some sort of system for documenting occasions where meal breaks are missed, or because that means if a meal break is missed, that means an employee was working that whole time, and if they're not being compensated, that can be a problem. But you just want to develop a particular policy and make your employees aware of it, and then follow that going forward.
That's the problem with our industry, like throughout the morning, there's a lot of the grooms and the hot walkers, they'll have some downtime, especially if not all their horses are going to the track and this and that, they're like just not doing much and they're there and
Well,
Yeah,
It's
but
hard
God
to clock
knows,
them in
God
and
knows when it's
out.
gonna be, you know, they do
They'll
all
run to the
that
kitchen,
time
get something
off,
to eat.
but.
A lot of
yeah.
guys will stop, go back to their room, change maybe.
yeah, so
During
it's
the work
kinda,
morning.
well, is that a
tough.
break, or is that within their?
That's
they're
their
still,
break,
they're
that's
still
what they
working.
do, that's the way the
That's
whole
just
industry.
within
Well, they
runs.
have breaks, but it's not when we say,
they're all
okay, you're
on
on
the
break
clock.
now.
Right.
I mean,
Okay.
it's not like when they go to the kitchen, you clock out, you know, they're all getting paid to do the job. I mean, we really should be agriculture. We're an industry that is really
A certain amount of work needs
lost
to
on
be
its
done.
own island.
If you do it in 3 hours or 6 hours, as long as it
Yeah,
gets
but we
done.
they might be able to come in and say,
Yeah,
well,
but
I'm
a guy
paying
will
for
always
meal
get something to
period,
eat.
we
A guy will
charge
stop,
$12
get something to
a day
eat.
for every person.
At
It's
7:30,
not
he's got a break,
cost
he may come back 8 o'clock, he may run over to his room for a minute, maybe he left something there, he'll stay there
Yeah,
for
mine
15
do,
minutes, come
they make
back.
a lot of money a week.
Mine
for
That's
those hours.
everybody that works for you is doing
Mine
that.
works
Nobody's
7
just
hours
sitting
a
there
day.
working 5:30 till 11.
But you're
plus.
But you're paying them for the 5:30 to 11.
Yes.
Right? So then that's not an
Yeah,
issue.
we're covered.
It's the other, yeah,
Four
I know
months
it's
ago,
frustrating for how you feel like you're maybe being
Four to
taken
11.
advantage of if they're not always working through that whole thing.
But that's okay, you're paying
I
them, so
put
if they
down
work.
mostly that they work 4 to
Right.
11.
If they get done 11:15 or 11:20, they might take a half hour to go get something
Well, my guys
before
work
that
a
day.
lot, and they're not allowed to.
Right, what I'm
can't
saying
do
is
it,
that
so
it's
you can get there.
the reverse is the
Well,
problem, where if they're supposed to be done at noon
Close
to take a half-hour lunch
Because
break,
they wanna-
and then they work till 12:30, and there's no documentation to show that, and then you just pay them up until noon. So it's where they're working in excess of the break, so they're supposed to be having a break according to your schedule. That's the problem. What you're saying is not a problem. I mean, it's a problem on your end, but I'm saying
I'm
not
just saying
within
it's
the
hard to
law.
document. and
Right.
So
it's
like, if our guys just work 7 hours in the morning, say like my guys work 4 to 11, and they get a break, but I'm paying them 7 hours even though they work 4 to 11.
Okay.
So what's the problem, like, are they gonna come in and say,
Well,
your
they need
guys
to have-
didn't get a break?
They need to have a break if it's over 6 hours. They need to have some sort of unpaid eating opportunity.
One of the problems
We're
is.
trying so hard, and that is absolutely impossible.
Yeah,
I
very
mean, we
is.
really bust our butts to
Really
do this
is.
right,
That's a-
but that particular little issue is almost
Yeah,
impossible.
it
So
really
you
My
say
is.
guys come in at 4, they're done either at 10, 10:30, 10:25, 10:18, somebody signed out today, 10:18, which is fine. But there's no meal break in there that I can document.
Right, because when these regulations are put in place, they're probably not thinking about your industry. They're
No, they're
not thinking of, I'm just saying.
Nobody
to
thinks
make
it's
sure.
this industry.
And so they're thinking about, the regular kind of 9 to 5 person. They're not thinking about that skewed morning shift where the person is, so I hear you, I'm just telling you
No, I
what the
understand.
exposure
It's
is.
It's not your problem, it's our industry needs to be put into a category in and of itself in order, so that we are protected.
Right.
And we're working hard to do that, it's just.
That comes with
like
like,
everything else, it takes forever and a day.
that comes with, lobbying and certain kind of going to, coming to
What would make us
business.
different
For
from
lobbying, like
others?
that on the other thing,
I'm sorry.
with regard to the call-in scheduling and stuff like that, we're working on that and all right now.
Right, yeah, because a lot of industries are pushing back on that, which we'll cover in a second. What was your question?
What would make a difference, us being agriculture?
I don't know the definition of the agricultural worker off the top of my head, but it is where I think it has to do with raising the actual animals that are, the birthing of them and the taking care of them, not the training of them. I think it's just a fine line, it's a slight difference, but we've looked into that and we've try to fit horse trainers into that category, and just as attorneys, we don't see that, so we don't want to recommend that that's how you should proceed. But I'm pretty sure that that's what it has to do with. I can look that up and tell you. We're going to move to the United States Department of Labor and New York State Department of Labor audits, which, I can just tell you that there's been a significant push in both departments to target the horse training industry and kind of scrutinize these policies. So I wanted to go over the basics first about what is an audit, why is an employer subject to one, what is the DOL looking for, what is the risk associated with the audit, and some tips. So what is the United States Department of Labor or New York State Department of Labor audit? Essentially what it is an inspection of your employer payroll records for the past 2 years by reviewing records of both current and former employees to ensure that the employees are being paid properly. Usually goes back 2 years, but can also go back 3 years, especially for US DOL. So why is an employer being selected for an investigation? They conduct these investigations for a number of reasons. They have to do with the enforcement of the laws and ensuring that an employer is doing what they're supposed to be doing. The Wage and Hour Division of the United States Department of Labor typically doesn't tell you the reason for the investigation. New York State doesn't really either. But a lot of them are generated by complaints from current or former workers. And like I said, they are usually kept confidential. And then some industries, if they see that there's some particular practices that departments are not fond of, they will start to inquire about other similar entities down the street or in the same vicinity. So we have seen them in nursing homes. We represent several nursing homes that are the subject of audits. Restaurants, it happens a lot, and now horse trainers. So what are they looking for? They're looking to make sure that there's the proper payment of wages, that the employees are being paid minimum wage and also being paid overtime, and that the timesheets for how you arrived at their pay are maintained and that they match up with payroll, because that's one of the first things they're going to do is ask you for all your records and then look at what your timesheet says versus what you paid them. And how you got to that timesheet is also scrutinized. They want to see the tracking of hours, tracking of overtime, and proper classification of employees, which comes up in New York State audits, where whether you classify someone as an independent contractor or if you classify them as an employee, because that can mean, if you classify them as an independent contractor, a lot of the wage and hour laws don't apply to them, and if you misclassify them and they should have been an employee, the Department of Labor will say, okay, you need to now pay unemployment insurance contributions as if they were an employee for a certain period of time, and that can be kind of expensive. It also means that if you classified someone as an independent contractor and paid them below the minimum wage, that then you would have to make that up, which I don't really think that many of the independent contractors that you encounter fit that description, but they're being paid more than minimum wage in many instances. But that's what the DOL, both United States and New York State, are looking for. And you can be audited by both, one after the other, because they do speak with each other. Occasionally, if you finish with the US DOL, then they may refer it over to New York State to make sure everything is okay in the eyes of New York State. That does happen. Okay, so what actually are they looking at? The payroll time records, your business records, and they will interview certain employees in private and get your employees' take on what is happening. The purpose of that is to verify that payroll and time records are accurate and genuine, and to identify workers' particular duties in sufficient detail, to see when the employees actually worked during the day, how long their shifts actually were versus how long the timesheets say the shifts were. They're looking to make sure that they can verify that. Interviews are conducted normally on the employer's premises, and the note about certain employees being interviewed, both United States regulations and New York State regulations protect against any kind of retaliation against any employees who have made any kind of complaints. So if you believe that an employee has made a complaint with the DOL about you, it is imperative that you do not try to harass them or question them about what they said or retaliate against them in any way. So what is the risk associated with these audits? Basically, both DOLs can find that employers owe back wages for minimum wage and overtime violations. So if you paid somebody $2 less than the minimum wage for a particular week, and then that was for 3 months, and then they look at that whole 3 months. So every day that you underpaid them, they multiply times the amount of days that that person was employed at that rate. So the numbers can add up very quickly in terms of back wages. Also, there's this thing called liquidated damages, which is a construct under the law where the Department of Labor can seek to have additional damages tacked on to the back wages up to 100% or double, because if there was particularly egregious violations or repeated violations. And that is at the discretion of the United States and New York State Department of Labor. They don't have to seek those, but we have seen a significant push that they are seeking them in most cases now. There's also civil money penalties, which are fines that are associated with the failure to pay for wages properly that are paid to the government. So this situation where the DOL says you didn't pay people properly can happen in the investigatory phase where they look at your records and they come to certain conclusions. If they are not able to resolve it with the employer and say, okay, employer, you owe X number of dollars, they will then refer, and the employer refuses to pay that, they will refer it to the litigation phase where the United States government will file a lawsuit against you on behalf of your employees to recover unpaid wages. I can tell you that that can get very expensive very quickly dealing with that, on top of the potential exposure for the unpaid wages and back wages that the department argues for.
I don't understand the liquidated damages. That's just they're just gonna invent more. We're gonna charge you double because we felt that you kept sloppy books?
Right, if it was intentional or if it was willful that you were trying to evade the minimum wage laws, that's the standard that they have to prove, but that is something that they request.
But you're paying minimum wage, but your spread of hours and various different things are not, your books are not in as good an order as they want them to be, obviously, and you're not using a time clock, you're using sign-in sheets and things of that. I find it appalling if they come in and very subjectively say, well, you're going to pay double.
Yeah, it doesn't have to always be up to double, it's up to 100%. So it could be 50%, but I understand your concern, and I've had plenty of go-arounds with investigators on the phone saying that it's ridiculous to get to that number because it's just unfair to the employer if they were trying to do right by the employees. And some employers, they take the position that if it's repeated or if there's some sort of scheme to not pay their employees properly, then that's where they go for the liquidated damages. But other ones, they don't always ask for them. But there's, with that said, we've seen a push towards asking for them. It's a way of, some would say, it's a way of having more positive things for the Department of Labor to talk about, like saying that they recovered more money for employees. Because what ultimately, those monies go back to, the back wages go back to the employees. They cut the employees a check saying, okay, we got $50,000 from your employer as part of this audit. Now they chop it up according to all the different employees and how many hours that they feel like those employees missed, and they give them back the money. So the liquidated damages go along with that back to the employees.
But don't they mail them a check? Don't they mail them a notice to go pick up their check? And if they don't pick it up after 90 days, doesn't it go to the state?
I don't know exactly what happens with that. I could find out. But I would imagine there's some sort of procedure where if the employee doesn't pick it up, then they would go back.
Yeah, then it goes back to the state.
Then it comes back to the state. Yeah.
So well, because you're in Mexico,
yeah, because I mean, exactly.
Wait
Some
till
of
they
these
go
guys
home
are
for-
visa
yeah.
guys. They go home. They're not going to receive. They're come back in 6 months. They're not going to receive the notice. Then you
Right.
guys
United States government being something.
Not
It's
him,
like
he's
a
a
cash
lawyer.
grab over
Yeah.
the government.
No, not him.
What happens when they find nothing wrong? Do they just
That never
automatically,
happens.
there's gotta be something wrong?
I did see that happen in a different industry when there was nothing wrong, and
Like, and it's the employee's word against the employer. They could make up anything and
well,
tell them that, just
wait.
to launch an investigation.
so there's two different things we just talked about. So
Okay.
there is the case where there is nothing wrong. I have seen that recently in like a doctor's office that was audited recently that we know of. To answer your question about the employee's word versus the employer's word, the thing that insulates the employer is that they have the records that show how the employee was paid, what the hours they worked. That's what's supposed to protect employers from that.
Okay.
So, in fact, if employers don't, in New York State, you have a duty to keep records that show how they were paid. So if you don't have the records, it actually makes you look worse in the eyes of the Department of Labor because you're actively trying to avoid complying with those laws. Is half the position that they take. So I understand the employee versus employer, the conflict there where it's like a he said, she said, but it's
And
not.
it seems like there's a lot of little loophole things that weighs on the side of the Department of Labor.
Right.
So they can really, on a technicality, get you on just about anything if they really want to.
Right, and it's employee friendly. It's supposed to. I mean, New York State is an employee friendly state in terms of unemployment. If anyone's ever tried to deal with the unemployment insurance division, they're always going to try to give unemployment benefits to the employee, or very often. The U.S. Department of Labor is less employee friendly than the New York DOL, but still very employee friendly.
At what point do they represent employers?
They don't.
As anybody.
It's well, my office tries to help as many people as we can, it's not. That's not the function of the DOL. I mean, they do education. I know they do certain kind of like educational functions to teach employers. But yeah, their function is to make sure that employers are doing things right and to penalize them if they're not, to recover the wages for the employees.
It's such an ever-changing thing, it seems impossible to be in compliance.
I understand that feeling, and it's I know you're not alone in feeling that way. But it's if you, in the eyes of the Department of Labor, if you are continually trying to stay abreast of what's happening, if you are communicating with your employees, if you're doing those wage notices, if you're and if you are cooperative, which is one thing we're going to get to in the next couple slides, if you're cooperative with the DOL and they feel like you are not kind of shirking or trying to dodge their questions and you're giving them open, honest answers, then the idea is that they would be more sympathetic to you and go less harsh on you. I know that's not a great answer, but
Yeah, they carry a lot of stress.
okay, so some tips of dealing with audits.
They don't like it.
We always recommend that you shouldn't underestimate the seriousness of the investigation, and that you should be aware that there's a possibility that there's a problem with your payroll practices. The idea that you want to kind of just ignore it or just assume that everything is okay with your payroll practices is we never recommend that, because you may think you're doing everything right, and we're not here to criticize, but we, as attorneys that are representing you, want to look at the books, get the information, and know what the real situation is so that we can best protect you. The big thing is that the Department of Labor may impose personal liability of management, staff, and owners. So it's not a situation where, it's a corporation and you're protected because it's a corporation, like Wall Street people or whatever. If you are if you are determined to be violating the wage and hour laws, there is the possible personal liability against you plus the business. So that's something to be very cognizant of. So like I said before, just a moment ago, we recommend that employers are always fully cooperate with the investigation, and because DOL investigators have a lot of discretion and authority over the process, how many records they ask for, how often they want to get records, how they view certain records, and that if you're uncooperative in the investigation, it may aggravate the investigators and may make them amp up the investigation. And I have noticed that in my course of dealings, that certain investigators who talk to the same department, they will take a different approach on different things and you'll have different outcomes. It's not fair, but it's just, we're just letting you know what we've observed. Another tip is that you should retain an attorney, not necessarily our office, but someone who works in the wage and hour law, and that because attorneys can assist the employer in determining their exposure, assessing the quality of existing payroll records, and determining which of the payroll records are responsive to their requests. We can also assist in negotiating with the Department of Labor on the scope of the inquiry, guide you through the situation, and we serve as a line of defense. But a thing to note, if you have 2 years of doing things incorrectly, we can't make that go away. We can try to negotiate that as best as possible, but if that's the way that they were paid and they were paid incorrectly, what we can do is try to limit it, but we can't reverse it. That's just something to keep in mind. Another big thing that the Department of Labor tells us is that they want to know that this investigation is making the employers come into compliance. Let's say, God forbid, there is a few issues with the way you're paying your employees, but then you come into compliance once the audit starts. That shows the Department of Labor that you're taking the investigation seriously and that you see them as a resource for compliance, and that you